Investors, one of my favorite stocks as a dividend investor is Realty Income, ticker symbol O. And as of this video, Realty Income is trading for just $55.25 per share, which is about 14.34% down from this time last year and 10.48% down year to date. Wow, I know. Now today, I want to keep it simple and answer the question, is it time to load up on Realty Income or at least pick up some shares with what you have to buy more shares with? Now on top of that, I also want to detail out why Realty Income remains one of my largest go-to holdings that I can never really get enough of as a dividend investor. Before we dive in, I'm Ari, your dividend investor here on YouTube, looking to share economic insights and new dividend stock ideas with you video by video to ultimately help you drive more passive dividend income. With that, let's dive right in. So as mentioned, Realty Income is now hovering around $55.25 per share, which is down by 10.48% year to date, which is really exciting to finally see this real estate investment trust kingpin at lower and lower levels. Because of course, while I want all the holdings in my portfolio to soar to new heights, I really selfishly want them at the lowest possible buy-in prices. Makes sense. Now, when it comes to the Realty Income team, not only do they actively pride themselves on being the monthly paying dividend company, but they have the history to stand behind their claim as a dividend aristocrat with over 25 plus years worth of not only paying a dividend out, but increasing that dividend as they go. And as of this video, we can see Realty Income's dividend yield is sitting at 5.36% according to TipRank's data, equating to a cool 26 cents per share owned. And while we do see this astronomically high payout ratio at 223%, we will head over to Seeking Alpha, where they factor out the special dividends to get a more realistic payout ratio of 74.04%, along with a nice growth rate here of 3.71%. All healthy looking metrics that as an investor, I can only applaud as I invest even more money into the company. Now before I go any further, I do want to know if this video is what you're looking for in terms of content and of course value. So let me know by tapping on that thumbs up button, and at any time during this video you could do exactly that, which ultimately then allows me to understand this is the type of content that I need to be creating. But now let's get back to Realty Income's overall health here, and we're going to do so by jumping into their financials. Whereas we could find a very clean balance sheet with their total assets coming in at roughly $50.67 billion and their liabilities at just $20.83 billion, which ultimately means that they can very likely cover their bases should unexpected market twists and turns come about. But let's now, as investors, not only look at the company and their metrics, let's suit up as if we were a part of this real estate behemoth to actually discover how they're operating to produce such financials. Heading into their site, it becomes abundantly clear, whereas we find that they have over 13,000 properties in their portfolio, most of which are leased to large moat-like businesses that wouldn't be rocked too hard in a volatile market, like Walgreens and 7-Eleven, to Walmart, Kroger, and Home Depot, and ultimately across 1,300 different clients, which keeps their occupancy rate way above 98%. Now, as their latest earnings, this is where we're actually going to see some of the real magic happening before our eyes, as they beat expectation with revenue topping $1 billion after their consensus just came in at $948 million. With a noteworthy comment from Sumit Roy, Realty Income CEO, in that they're going to continue to evaluate and expand into new geographies. And with more expansion, well, that means that they not only have the capital to actually do so, but more importantly, more profits coming our way as investors down the line. Now, a lot of investors recently have been up in arms about their recent purchase from Blackstone to buy the Bellagio Las Vegas for $950 million, which I personally wouldn't have expected from the Realty Income team, but sometimes it's definitely worth a risk venturing down a path that you've never ventured down before to ultimately get what you've never gotten before. And with their reputation on the line, I'm really willing to give the team the benefit of the doubt here for Realty Income. I mean, we are talking about the best, and I mean literally the most dominant net lease solutions REIT. So where do I stand? Well, I always like Realty Income below $60 per share, and seeing it now at $55 per share just means that I have my green flag up, as I think it's a very strong choice if you're trying to balance out your portfolio or add some diversity into it with some real estate. And of course, analysts are there with me, rating Realty Income a very strong buy with over 23% worth of upside to come up with a forecasted share price of $68.25 per share. But now I'd love to know your thoughts on Realty Income, if you're buying more shares, or just your thoughts on their recent deal with Blackstone. Will it make or break Realty Income? Comment down below to let me know. Of course, you don't have to go too far for the next video. Just click right here. But before you do, tap on that thumbs up button. Of course, subscribe to never miss a single video.